Hello and welcome to this special broadcast. I'm Parikshit Luthra. Finance Minister Nirmala Sitharaman is set to present the interim budget in less than 2 days ahead of the Lok Sabha polls later this year. The government held an all-party meeting today on the eve of the budget session, which will take place between the 31st of January and the 9th of February. The Finance Ministry expects India's growth at closer to 7% for FY25. In its economic review, the Finance Ministry highlighted that India is expected to become the world's third largest economy in the next 3 years with a GDP of $5 trillion and can aspire to become a $7 trillion economy by 2030. What are some of the big numbers to watch out for in the interim budget? Lata Venkatesh is here with the key expectations.
The key number to watch is always the fiscal deficit. Now, market is torn between a base case, those who see the fiscal deficit coming down to 5.3, and the optimists who expect 5.5% fiscal deficit. Now, the base case, guys, their case is that deficit will be cut from 5.9 to 5.3 because the government has committed to bring down the fiscal deficit to 4.5% by FY26, which means 70 basis points lower deficit, FY25 and FY26. Also, they argue high deficits when growth is already high is not good for inflation. And then good tax collections, where growth is good. All this makes it a good time to cut the deficit. Now, what are the optimists with 5.5% fiscal deficit saying? They say it's a pre-election budget. We will have to see some populist promises. No harm running up a higher deficit in a year when, remember, $25 billion of foreign portfolio money, FPI money, is going to flow into government securities because Indian bonds are included in the JPM bond index. So that's the argument for the 5.5, guys. Now, the next big number that everyone will watch out for will be the CapEx number. CapEx grew by 35% in the FY24, the current year's budget, which was presented last February. What's the base case? Base case expectation this time is CapEx will grow only modestly by 10%. And it will still be 3.2% of GDP like it was in FY24. Now, optimists like Citibank are saying that CapEx is likely to grow by 20%. At least that will be the budget announcement, to 12 trillion rupees, 12 lakh crore rupees. This obviously important for the stock market. It's good for construction and railway stocks. Other key numbers to watch. 1, nominal GDP growth. Now, after a weak 8.9% nominal GDP growth in the current year, an 11% assumption is possible, but actually it's between 10 and 11. 7% real GDP growth and about 3 to 4% inflation is the base case. But some say the government may be conservative and assume the 10.5%, the lower level. A second number to watch will be the overall tax growth assumptions, or what economists call tax buoyancy. Now, tax growth surpassed all expectations this year, mostly because of income tax growing by over 30% in the first 8-9 months for which we have data. In FY25, our economist poll shows that average expectation of tax growth is likely to be modest at about 12% because corporate sector margins are likely to normalize, so that they will pay less in terms of tax. Now, tax tinkering will be promises at best, say most of the brokerages. Subsidies and revenue expenditure are expected to be slightly higher, but they will grow less than the nominal GDP, that is less than 10%, because of pre-poll moves like raising the transfers under the Pradhan Mantri Kisan Samman Nidhi. It may be raised to 8,000 rupees per family per year. Now, if this happens, it's very good for rurally exposed stocks. More LPG subsidies also expected. That will also push up the bill a bit. Finally, the big number for bonds and banking stocks, government's market borrowing. Net borrowing is seen around rupees 12 lakh crore, 12 trillion rupees. If this comes true, then bond markets are going to soar, as will, of course, even banking stocks. Even a slightly higher figure won't hurt. FPI's hai na, index inclusion hoga. The market is going to be happy about it. Market is torn, therefore, between a balanced budget and go out and spend budget.
All right. Thank you very much, Latha Venkatesh, for joining us with the big numbers. To take this discussion forward, we're now joined by Ashwani Mahajan, National Co-Convenor of the Swadeshi Jagran Manch, Secy Garg, former Finance Secretary, and Salman, National Spokesperson of the Indian National Congress. Mr. Garg, if I can begin with you. Of course, the stock markets will be looking out for certain big numbers, big announcements in the interim budget. But this is not a full budget. It's a vote on account. Give us a sense of what goes into making a vote on account. And from your experience, what are some of the broad themes you expect the government to focus on? There has been a lot of emphasis by the Prime Minister and the FM on four groups: youth, women, farmers and poor. Your view?
See, the interim budget is positioned in such a way that just before the elections, campaigning starting any time now. And this was the same situation in 2019. So if you want to draw some clues about what happened or what is likely to happen in 2024, you can look at the 2019 budget. There, the government made three major announcements of the nature which can be categorized as populist in that sense. The government brought down the taxability of the income taxpayers by raising effectively the minimum tax slab to 5 lakhs for those who have income lesser than or who had income lesser than 5 lakhs. The PM Kisan was brought in along with one installment to be paid within that year itself, not in the next year, for which the budget was made. And finally, there was also a major announcement for the 50 crore unorganized sector workers that PM Shram Yogi Mandhan. That is what you mentioned about the four groups. Farmers, youth are covered by these announcements. The middle class is also a very favorite group of the party in power, and that cannot be missed. So taking that cue in mind, to my mind, what's likely to happen this time, again, picking up from the assembly elections recently held, where a lot of Modi guarantees were promised, which were handouts to women, handouts to poor, fuel subsidies and other things. So my sense is that there would be a heavy dose of these direct benefit transfers, cash handouts to women, youth, and farmers. Farmers, it might be in the form of enhanced PM Kisan contributions. For women, there might be a separate new announcement. And for the youth, especially the unemployed youth, so to say, or in the workers in the unorganized sector, there might be one good announcement. Lastly, the capex has been the winning selling point of the government. Everyone loves it. Industrialists, people, politicians. You have many opportunities for inaugurations, laying foundations, stones, etc. So, and this is universally acknowledged as a kind of successful. So I would suspect that there would be a good increase, something to the order of about 25% for the rail, roads, highways, defense. This is where our most of the capital expenditure goes. So a lot of expenditure on policy schemes and the capex. Fiscal deficit, I think, can wait for the next year. Should be in excess of 5.5%.
Okay, so you're saying fiscal deficit should be in excess of 5.5%. But importantly, you're speaking about increased capex allocation by at least 25% for railways, road, highways and defense. All sectors which could lead to more employment for youth in the country. Salman, coming to you, there was an economic policy review. There was not a survey this year, but a review which came out yesterday. And that spoke about a 7% plus growth in FY25 and also going ahead. How do you see India's growth as it is poised currently, some of the challenges that you see and your hopes from the budget?
Well, whenever somebody talks about growth, and of course it's going to be about 7%, I think, this year. I don't really get swayed by growth numbers that much. If we really have to talk growth, then let's talk, that under UPA, the growth was 8.5% under UPA 2. It was 7.4% or so under UPA 1. The growth of these 10 years is going to be roughly about 5.8%, if I'm not mistaken, including if we get to 7% this fiscal year, which is likely. So on growth, I'm not, I don't think there's anything spectacular happening. Now, of course, what we should think about is the composition of growth. What is driving growth, and what constitutes growth? Now, what do you want to see in an economy? You want to see investment in an economy, because investments typically can lead to jobs. Unfortunately, investments have not really, private sector investment especially, has not kept pace. Of course, the government has come in recent years to bulk up investment, but investment as a whole has been a great disappointment for this government. And I frankly don't have all the answers to why that is the case. But your viewers may be interested to know that in these 10 years, we have not had an investment ratio greater than the lowest of the UPA era investment ratio. This government has not touched that, which is to my mind, that's shocking. The other side is consumption. I think consumption is a pretty sad story. Everybody knows about it. Very few people talk about it. And without consumption, we can say that FMCG companies are now selling smaller, quantities of their products, trying to continue with their brand loyalty. But at the same time, they are giving you less for what you are paying. So consumption has not really kept pace. Exports have come up in recent years. But if you look at the overall export story for these 10 years versus the previous 10 years, there's absolutely no comparison. Now everybody will talk about roads and bridges and capital expenditures by the government. Yes, they have increased them, but I don't agree with you that they're going to lead to jobs, because there is no evidence so far that capital projects have led to any a significant improvement in jobs. In fact, the young people that you spoke of, that the Prime Minister thinks he's going to do well by, youth unemployment in India is upwards of 20%. Youth unemployment for graduates is about 43%. So I don't think this is going to really work. So I think it's okay to talk about headline numbers, 7%. It's okay to talk about distributing, what Garg Saab called handouts. Of course, the government is going to come up with something of an announcement on, we're going to put some money in people's bank. And by the way, this is a very great model, right? The PM Kisan, when it was launched just before the 2019 election, one installment goes in. You're actually taking public money, giving it to them, hoping to buy their votes. And what they really need is jobs from you, but you're unable to deliver. So what you'll do is just before elections, you'll give them some money, and voila, you just kind of win elections. So I think it is disingenuous. I don't think this is the right model for India, but that's my view.
Right. Of course, sustained job creation and unemployment continue to be big issues for the Narendra Modi government. Let me go across to Mr. Ashwani Mahajan. Mr. Mahajan, the Swadeshi Jagran Manch, an RSS affiliate, has over the last few years consistently been talking about a greater need to localize in India. How do you expect the Atmanirbharta push to continue with this budget? Any particular sectors where you have sought government intervention for?
See, in the during the UPA regime, the major fault line was the increase in Chinese imports, and that led to a decline in the domestic production, in the sense that the percentage of coming from manufacturing was consistently coming down. And that was perhaps one of the major reasons which made Dr. Manmohan Singh to say that, yes, it's a growth, but it's a jobless growth. And this joblessness is a consistent problem uh, right from the very beginning. It is not related to any particular regime. The major reason for joblessness had been the globalization, and unbridled globalization had led to a dumping of goods from different parts of the world, and especially from China. And that has led to a deindustrialization kind of a situation in independent India. And that had been the major uh, problem. This government, starting from the budget of 2018, started protecting domestic industry, which was again a debatable thing, that whether we should protect the domestic industry or not. Many people said we should not, but that had produced results. And we see we had been importing uh, our mobile phones, smartphones in a big number, and we started exporting them. And similarly, other in textile sector and other sectors, we did well, including white goods. That was the result of the 2018 budget announcements, and then later on the hike in tariffs in July, August, and then September for different kind of commodities. In 2020, it was realized that yes, we are so much dependent on China. We are not producing APIs, which is hurting our public health security. We are not able to even produce semiconductors, which was hurting our industry a lot, and many other. So a list of 15
Right.
industries was made, and ultimately production-linked incentive schemes, hike of tariffs, imposition of anti-dumping duties, and other measures were adopted, which were obviously in tune with the Atmanirbhar Bharat. And then some people started saying that, oh, this Atmanirbhar Bharat is a return of a Nehruvian era. But we have seen over the years that this is not a return of Nehruvian period. This is actually made in India for the world. We have
Okay.
increased our defense production, and now 70% of the defense procurement is coming from domestic industries, and we
All right.
are ready for the exports as well. And exports
So,
of
Ms.
defense
Mahajan, you
products is
expect the
also
push
rising.
to continue?
Yeah, this push, this definitely, this is when
All
some
right.
policy is giving you good results. Obviously, it will be pushed in the coming budgets as well.
Okay, I'm going to take a short break, sir. We have to take a break at this point, but this discussion continues. We request all our viewers and panelists to stay with us. We'll be right back. Welcome back to this special budget countdown show. Ashwani Mahajan, National Co-Convenor of the Swadeshi Jagran Manch, Secy, Garg, former Finance Secretary, and Salman, the National Spokesperson of the Congress, continue to be with us. Mr. Garg, looking at the global challenges, especially with regard to exports, also supply chains, what's happening in Red Sea, what's happening in Ukraine, the Middle East, how do you think these are going to weigh down the Indian economy? And do you expect the Finance Minister to make certain interventions to probably ring-fence India, protect India?
These kind of situations, the war in Ukraine, or Gaza-Israel conflict, or the Red Sea situation now, keep on arising. This is a world we live in. It's not as dangerous as it used to be in 40s of the last century, World War and all, but still it causes a lot of disruptions. The export-import situation is not, to my mind, greatly impacted by these events, but they are more fundamentally impacted by the long-term trade. For example, today the schemes in PLI and other sectors which we bring in for generating growth in the manufacturing sector and all are largely in the new technology space, whether it is digital technologies, semiconductors, or for that matter, solar modules, cells and all. The fact is that in these areas, we don't have original technologies. These technologies were evolved somewhere else. If you want to build a manufacturing base on them, you would have to import them. There is no way. China has done really very well as far as the mastering of these technologies and development of these technologies is concerned. Our strength is primarily in the services which we build. We build excellent services on the digital side. We are fabulous in financial, legal, and other services. That is where and that's incidentally, I don't know why our policymakers don't pay attention to that. The manufacturing is no longer that generating, employment generating. It's too much automatic. Hardly even our infrastructure space, you build roads, you build rails, there's hardly any employment there. It's all automation, use of the best of the technologies and machines, whereas employment in services. So I would expect, though this is not a main budget, so I don't think there would be anything on the schematic front from that point of view. But since you asked about what is to be done, we should very carefully watch the performance of our PLIs. Now, after about 4 years, we've not disbursed even about 7,000 crores out of 1.93 lakh crores of that. Barring one or two, there is a ZAM, there is a blockade in all of these PLIs there.
Mr. Garg, you are right, because the government is carrying out a review of PLI schemes, and there is a possible tweak of certain PLI schemes which could also be announced in the budget. I have to take quick wrapping comments from Salman and Ashwani Mahajan. We've run out of time. Salman, one top ask from the Congress party, from you, from the interim budget, which you think should definitely be on the table.
I think the only ask I would have of the government is to be very clear and truthful about the data that we have in this country, because we have a data integrity issue. And by the way, Ashwani ji said, and if Ashwani ji really wants a good, the good old days, then he should be supporting the Congress. Right now, the manufacturing value added as a share of GDP is 13%, Ashwani ji. At least during Manmohan Singh ji's time, it was 16%. You should have been happier with us. You're happy with Modi ji for bringing it down. You talk about Atmanirbhar Bharat. Then why don't you say to people in the country that our imports from China are $100 billion plus? We run trade deficits with 9 of our top 10 trading partners, Ashwani ji. 9 out of 10. $50 billion trade deficit with China. Then you should be telling people about that. You should be supporting us, Ashwani ji, not Modi ji.
All right, Ashwani Mahajan, one final comment.
Yeah, first of all, I would like to answer to his query that, it was during Congress regime that the share of manufacturing in GDP started declining. Okay. And now the government is making efforts through PLI scheme, and definitely I agree that today the PLI scheme which we are running, it has got many problems, and we need to tweak the same in the favor of MSMEs.